Very good morning, and today is October 3rd, and time is about 8:31. I think today is going to be definitely a good, I'll not say good day, it's going to be a day where the market are going to fall, but I think we'll have to see how the day would shape up. I think that's very important. Um, Okay, I think my standard question before I go ahead and then say anything. Am I audible? If you have any challenges, do let me know. So today's live stream, I want to really put into two, three different items. The first item is definitely so Friday, bit late night after the market awards, SEBI has announced some of the new measures on how the derivatives market is going to really shape up. I think that's the first one. The second one is, I think that today's state of market, I think it's important to definitely know. And I do have a dangerous positions. I was expecting some bit of a recovery on Friday. I think if there was no war, I would probably think there would have been recovery, but that's all right. So I do have definitely some sold put positions. I will also talk about how I'm going to manage these positions. I think that's the whole part of it. Obviously, I would not want to get into losses and see how do I manage those positions. I think that's the couple of items for today. And let me quickly get on to um, screen sharing and where is this? All right. So this was something that I posted on Twitter as well the other day. I think it was Friday evening, if I remember correctly. Let me focus on the content and I'll get back to the video a little later. I think this, so there were only 6 measures, and these 6 measures are not very, I think these were a part of the proposal anyway, so they're not very different. The first one is there's going to be increase in the contract size for the index derivatives. So I think there was a proposal too. Today, I think if it is 5 lakhs, the proposal is to make anywhere from 10 to 15 lakhs. I think that was one of the biggest thing. And that means that, let's say, if I think Bank Nifty, let's say 15 lots, right? So that might probably become 45 lots. So that the lot size, in fact, would increase. And the second one is, I believe Nifty today 25 or 50, I'm not able to recollect, 25, yeah, one of those numbers anyway, whatever the number that would actually increase by three times. I think that would probably make the buyers to accumulate a lot more money, and obviously the seller's margin also will drastically increase. The only thing is, I think my view, the impact of this would be the number of people or number of contracts that are being traded might drastically reduce, and also there's going to be some bit of an entry barrier where people wanted to really get onto the market. But I think there is also some bit of a danger, right? So let's say somebody has only, let's say, 10,000 for instance, not that all the people will have 10,000. Instead of they buying, let's say, OTM, they would probably go on and buy a for OTM. My view, that would even be dangerous because for OTMs are usually expire worthless. So I think that would be one danger. And the second one is the second proposal that SEBI came up with is rationalization of the weekly derivatives products. I think this was very well discussed in the recent days, right? So especially with the Jane Street coming, I mean, I do not want to point out any one trader, but I think a lot of these big players, they started doing a lot of manipulations and then the spikes, etc. I think most of you would have seen, and especially, again, I can't really say it is done by Jane Street or Citadel. I do not know, or the Tower. I think those are the 3-4 names that I usually hear. I do not know if they're doing, but then especially from their profits perspective, they are doing something different. Whether it is a manipulation or whether really good with the derivatives, I do not know. But then their profits have increased by almost like more than 50% in the first half year. So, which means that they're doing something that which normal retailers are actually not able to do. I think that's the, so that goes with the fact that today we have expiries pretty much each week. I think most of you know what are those expiries. And earlier, probably 1.5 years, 2 years ago, we had only weekly expiry for Bank Nifty. Later on, Nifty was introduced. After that, Sensex came into picture, and after that, slowly Mid Cap Nifty, and then in fact, Mid Cap Nifty was originally either, I think it was Wednesday. I think it was moved to Monday, and then Fin Nifty came in, and then this got moved to Tuesday. I think these are all slowly introduced, and probably 1.5 years or 2 years. Pretty much there is a expiry each week, starting from Monday to Monday. In fact, two expiries, both Midcap Nifty and BankX, and other days it was just one expiry. So I think that's where it is. I think that's going to go off. I think my view and prediction, because SEBI said that it got to be benchmark index. I know Bank Nifty became a first weekly expiry, but I think technically that shouldn't qualify to be a weekly expiry. So let's look at, I mean, for Nifty, my view, the first priority, I think my view would be Nifty, and then the second, sorry, apologies, for NSE, the first priority would be Nifty, the second priority, my view, would be Bank Nifty. I think the BSE no-brainer, it would be Sensex, because I know BankX is there, but then BankX is never a benchmark index for Sensex, BSE. So BSE is always known for Sensex. So I would be very surprised if at all they go with, for instance, BankX. So as of now, Nifty is the first priority, Bank Nifty is the second priority, and then that is for NSE. And for BSE, definitely Sensex is the first priority, and then the second priority would be BankX. I think we'll definitely come to know very soon what are those indices, and I think this would definitely impact. I know a lot of people would have written some algos and quotes. They'll have to rework on them, but that's all. That's part of life. The third one is increase in the tail risk coverage on the day of option expiry. So it's basically on the day of expiry, I think 1 day before the expiry, the margin requirement will become, I think this is probably is going to impact the sellers mostly. It will go by 3%, and then the last day of expiry, it will become 5%. This is predominantly for the, I think the stocks anyway, there is an increase in the last day of expiry. The margin requirements drastically would increase. The reason is in case it is required, or in case if people do not close, they have to take the delivery of the stock. So in case of indices, that problem is not there. So that's the reason there is a increase in the margin itself. So I think on February 1st onwards, my view, I think today for all the smaller retailers, the option premium is actually taken upfront. Very rarely they get from the, let's say, pooled money or whatever. But I think my view, it is already there. Maybe some people are getting benefited at this point of time, but being an option seller, I think they always need to put across their money. There is no question on that. I think the fifth measure, or the second measure on February 1st is a little tricky. This would actually take away the calendar spread treatment on the expiry day. It's basically the margin advantage that you get when you, for instance, when you sell that weekly expiry versus you hedge with a monthly buy call. Then I think you will not get the margin benefit. I'm not sure how it is going to be helpful, but that's all it. So I think that's probably would help the people to not to do too much of a trading on the expiry day, because expiry day selling is always, and not always, because you get the time decay advantage, you will be able to make some money. But if you're able to hedge with the next month's, let's say, or next week's buy position, the time decay will not really impact you. I think that is one advantage that a option seller would actually get. But I personally do not do much of a calendar spread. The reason it's very difficult for you to manage and also visualize the time decay and also the payoff chart, etc. That's a very reason. Intraday monitoring of position limits. I think this is basically instead of really putting across, let's say if there is a spot price, right? So instead of really opening all the 20-30 prices either side, initially there would be, let's say, 20 positions, and then when the market moves, the other 10 positions or the 5 positions or whatever, they get introduced. Let's say if the market is, let's say, just for the argument's sake, right? Let's say Nifty is 26,700, and then you will have positions until, let's say, 27,700, and then once the market moves, for instance, the market goes to, let's say, 27,000, that's where you would introduce other positions for the next 300 points. I think that's the intention there, but I think that's going to take some time. So that would again probably take away some bit of a speculation what people do at the for OTM. in the starting of the day. So that would definitely reduce some bit of a speculation. I think those are all the F&O measures. I think my overall view would be, I think there's going to be um, some bit of a low activity from the retailers, but I think generally the FIAs, DAs, I think they do a little bit on the options, but not much. But FIAs do quite a bit, and I came to know over the weekend FIAs again. I need to uh, get 100% confirmation, but this is somewhere I read this. FIAs, in fact, their profits on FNO is considered as a capital gains versus in India. I mean, capital gains typically 20% or less than that, right? But I think a lot of us, not a lot of us, I think all of us in India, if you're doing a retail trading, you'll have to consider it as a business, and then you get into 33% or 40% tax bracket, which is quite substantial if you're making money in the options. I think that is some discrimination that our facilities at FAS are getting at this point of time. I think that's the I think my view as let me get back to the impact rate. So I think there's going to be some bit of a activity reduction from the retailers in India. I think at least from the stats perspective, most of it has seen a lot of retailers are losing money, and I think very few people are profitable last year. I think that's definitely not a great news. I think this would probably save some money of the retailers, my view. And it will also take away some bit of a hero zero trades, and then also people getting into market with a bit of a gambling kind of a mentality rather than getting into a long-term or hedging kind of a strategy. I think the SEBI, in fact, questioned the entire business around the scalping, because options are never meant for scalping, but that's what people do today. All right, I think those are all the, I mean, obviously, if still people want to do, nobody can stop them. People can always do that. It's up to, because it's their own money. Nobody's going to question them. I think those are all the quick measures of definitely SEBI. Let me get back to market very quickly. So Nifty, no brainer. I think it's going to really open up quite low, and it could be, let's say, at least GIFT Nifty suggesting 200 to 300 points down. So we'll have to see. As I said, I do have 25,800 sell put option. In fact, that I entered almost like last 2 minutes, and that's all right. So we'll always learn from mistakes. And the only thing is today I'll have to find what is. In fact, the capital is not quite high. I used only, I think, 5% of my capital. It's not a big capital, but still I'll be able to. I hope I'll be able to manage, and then see how the today's my plan is. I'll explain my plan, what I'm going to do as the market opens, and eventually the rest of the day. I think today it wouldn't be appropriate to really call out any trend or whatever. Today, obviously, it's going to be gap down without any exception, and eventually, and generally, these war kind of situations, they always markets always pull back. So, in fact, let me go back to this is GIFT Nifty. GIFT Nifty, as you can see. Let me get rid of pretty much all the indices. No, I think it's not updated. But I think if I have to look at Nasdaq. Yeah, definitely there was a fall on Tuesday, which was because of the war, and then yesterday it definitely picked up. So I'm thinking our markets also, if there is a gap down, I'm sure it would be some bit of a pullback. So do not get into the trade at least in the first 30-45 minutes. But I'll have to get into trade. The reason is I'll have to protect the PE. So I will definitely do that, and let's see how the market would actually do that. So I would think India market would follow this kind of trend. Even this day, if there was a pullback. So again, as I said, it would not be right to really give any numbers today, because anything can happen. So But I think generally today most of the markets have picked up because yesterday was holiday for us, so there was not much of an impact. All right, so in fact, I was actually looking at what should I do. So these are all my positions right now. So anyway, Reliance, I'm not much worried. Let's untick these two right now. So I have shorted the 25,800 PE. Again, the quantity is about 700,000, and then you also have 25,500 PE. And if this is the thing, right? So my expectation was it would probably, there would be some bit of a reversal, but obviously that did not happen. That's the reason I usually do not short at the ATM, but that's what I did. For ATM, probably it would have been a little bit protected. But the idea is to, I still have good amount of capital left. So the idea is to, as soon as the market opens, I will get into straddle, but then that's going to be a screwed straddle where I'm going to really sell a lot of call options. And obviously these numbers would not really stay here, right? Let's say if I go to 1,000, these are the lots, and that would definitely will not impact me quite drastically. The losses perspective, it's not, and then I'm still left with a good amount of capital. So if I really get onto, let's say, 2,000 lots, that would still be profitable trade. Downside, there is absolutely no downside risk, and upside, obviously, I do have some risk in case there is a bounce back. So I'll have to play a bit cautiously. Obviously, these numbers are not valid right now. So as soon as the market opens, these numbers would change. I think that's a plan at this point of time. Let's see how the day goes. And I would only think once this today gets over, maybe there could be some bit of a reversal in the market. I might be wrong, but that's what which I'm thinking at this point of time. All right, I think that's all. And I think open interest also, my view, wouldn't really matter today because most of these open interests would be definitely be broken. And I might probably do some Sensex trade in case if market actually drastically falls. I would probably stay on the CE side. So that would actually compensate in case if I lose some money. All right, I think that's all for now. And let me unshare the screen. All right. So if you're trading, be cautious. And today, if the market falls, obviously the premiums are going to be a little higher, and then which means that the VIX would also be higher. You would, if you're a seller, you would be able to make some money. If you're entering today, if you're a buyer, obviously you need to be very careful because it's going to really, the time decay would really kick off as soon as you enter the trades, because the premiums, when they go down, if in case of the market reverses, premiums will drastically go down, and then you will lose on the two things. One is on the IV, the second one is on the time decay. All right, if you're trading, I wish you all the best and success, and then do not really try to jump into trading in the first 15 minutes. I know it's going to be very lucrative, but be careful. All right, any questions? I can stay for a couple of minutes. And I will try to record, but I think I will not be able to do live stream because the morning I need to really manage a couple of things, right? So I think, but I'll try to record what I'm doing, and probably I'll condense it and then present it later. But let's see how it goes. And I think Monday was actually a good day. I could make some good amount of money, and yeah, today, as I said, the intention was to not to make money. The intention is to not to get into losses, definitely. So that's the thing. All right. I think have a great remaining day. As I said, I will probably record some other bits and pieces, and then do that video, probably make it available later in the day. Let's see how the day goes. Or even if I do not record, I will at least track the trades that I'm doing. And it would be a good lesson for me also to definitely recover. I mean, I had gone through this. It's not like it's the first time. Ukraine war, and last year October when Israel, sorry, I think, yeah, there was Israel attack. There was an attack in Israel, so that time also there was an impact. Alrighty, have a great day, and see you all tomorrow or later if you come on live stream. We'll see. Bye bye.